The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, let's take a look at the midweek trade action. We were able to kind of claw back to unchanged in quartered soybeans. We had a decent day in bean oil, a little more pressure in the wheat side. Cattle had a solid day as well. Kind of we'll just call it kind of a mixed bag. We got a lot of things to take a look at, though, here on the show today. Joining us now for market analysis, always happy to have Mike Zuzolo with Global Commodity Analytics with us here on the show. Mike, good to catch up with you again, and hope all is well. Kind of a mixed bag at midweek for us here, Mike.
Yeah, we've definitely lost some of the enthusiasm in the market. And, this latest roughly week of trade ever since late last week has really been hallmarked by the fact that the Chinese continue to cancel wheat shipments and wheat exports. And today was no different, with France Agrimer reporting that China had canceled soft red wheat or milling wheat out of France as well. And that did take the European market down. And it did, kind of lose some of the investor sentiment, I think, Jesse, in terms of wanting to buy into this market. But we didn't do bad given the bearish news, the price negative news. I think the South American weather and some of the other features, like some private new crop planting acreage numbers that came out mid-session, these things, I think, helped underpin us with the soybeans, continuing for a second day in a row to find some surprisingly strong price action as that March futures gets ready to exit the stage on Thursday.
Well, there's plenty for us to look at here. Let's start with China, because I think that is a very big topic here. And you mentioned the cancellation of that French wheat. We've seen some 19 million bushels, I think, of SRW wheat canceled by China. I mean, just look at their CPI here. Let's pull up this first chart. I mean, talk about some of the sentiment you're feeling and hearing and getting from China, making all these cancellations. I mean, what exactly is going on here, Mike?
Well, this chart shows you the very strong correlation and relationship between the pork prices in China and the Chinese food CPI. And on this week, the overall CPI from China came in for the month of February on a plus 0.7%, food and everything included, on a year-over-year basis. But this chart shows you that the food CPI came in at negative 0.9%. That's the yellow line. It was negative 5.9% last month. And so we've cleaned out 5% of the negative deflationary price action in the food CPI, the consumer prices for China, since the last report. This is mainly due to the red line, which is, I track several pig prices around the country, but Sichuan seems to be one of the better ones to look at, in my opinion. We see by the vertical light blue dashed line that fourth quarter of last year, the Sichuan price made a low. It was slow to come out of that low, but once we started to gather some momentum on the upside as China liquidated their herd, we do see that direct relationship, and you can track this all the way back to the chart beginning in 2014, 2015, where it's typical that the pig price will lead both the food CPI up and down. I think why I'm showing this to you and the viewers today, Jesse, is because of that often spoken about term funds versus fundamentals. The wheat, the hogs, the copper, they are ground zero when it comes to Chinese deflation. And so I've had a lot of people, brand new people, sign up, and a lot of clients call and a lot of subscribers call as well that I work with and say, you talk about this food versus fuel, or funds versus fundamentals, the investments versus supply demand. Well, this is exactly what we're talking about. Is you can have negative news. You can have a WASDE report that confirms a 10-year low in world wheat stocks to use ratios. And it just happens that this month, when they reported it for a third month in a row, it matters. And I think it mainly matters because of China's stimulus and some of the early data coming out of their Lunar New Year. And then the CPI late last weekend really helped kind of solidify the base being built. So we're at an extra critical time now with the Fed and China giving us a tailwind right now in the agriculture sector.
And with that in mind, with China's CPI and things like that, and our Fed news and more, how is the Chinese yuan doing? I mean, let's talk about that a little bit here, Mike.
Yeah, this is where the funds versus the fundamentals make a lot of difference. And this is why I've done the research I've done, Jesse. And it goes back to this offshore US dollar against the Chinese yuan, or I should say offshore yuan. This shows a very strong wedging formation. We came out of the 2021 lows, and that's the dollar low against the Chinese offshore currency. So the dollar started to strengthen in late 2021. It took a big corrective wave thanks to the Federal Reserve policy in mid 2022, but then picked up the support and the buy side on the dollar again as we got into early 2023. This was, in my opinion, a big heart to the feature to why we've had such a bad problem with agriculture commodities, because the dollar's been going up. It's been lessening our selling power and lessening China's buying power. Again, funds versus fundamentals, you just kind of got to look at it a different way. So now we've seen the dollar correct since late 2023 against the yuan. What we want to see now is a breakout to the downside in this chart. And I'll say this without having provided these charts, but Jesse, if you pulled up a monthly wheat, monthly corn, and a monthly bean chart right now, you'd have major wedges like this, even bigger than this, but drawn off some of the same highs and lows that you have in this chart. And so what I'm trying to get is a domino effect here started in the early part of 2023 calendar year to see the dollar go down against the Chinese currency. That then pushes the Brazilian currency up with the Chinese currency. All of a sudden, we've got a couple really good reasons why we'd want to see some more short covering by a still very net short fund manager type mindset.
And to your point, thinking about pulling up some of those various charts and some of those wedges that are building, that would maybe speak to my thought, Mike, that some of these grain markets are going a little sideways kind of here right now, right?
Yes, and this is not good. We don't want this. We don't want the grain charts and the grain markets to be the leader. We want them to follow these other markets. And just today, and we call copper Dr. Copper when it comes to China because it's so sensitive, because China is the largest consumer of copper. They're one of the largest producers as well, but two of their largest, if not their largest, copper smelters came into a joint agreement today and said, we're going to cut our production back severely. Is the expectation. They didn't give figures yet, but the idea is they're going to cut it pretty severely because the processing fees in China in copper that smelters make, essentially, they're at 10-year lows. So this is the deflationary pressure that we're seeing in real time with things like copper, commodities like copper. Well, copper reacted very quickly to that. Copper futures made an 11-month high today, and you see the change in the trend in the copper. It's now not only broken out of a downtrending mindset, it's broken out of a sideways mindset, and it's heading back up towards its 2023 higher upper range levels. We want that soft red wheat to follow because we see the very close relationship historically in the last 2 to 3 years of how the copper and the wheat react with one another.
I wanted to ask you this too before we segue to South America. Another world kind of feature I've been watching here lately has been the palm oil values and veg oil. And I think there was some news out of India Wednesday surrounding the palm oil market as well. But, soybean oil was higher Wednesday. That seems to be a supportive feature to the soy complex as a whole. But anything you're kind of watching with some of those world veg oil values right now, Mike?
Yeah, it's an important feature because we had lost the sustainable aviation fuel bull, so to speak, domestically here with that change in the climate processing of both ethanol and biodiesel from the Biden administration and pushing those off. And I think we needed some fundamentals come in and help support the soybean oil. Having said that, Jesse, I think USDA did a really good job on their WASDE report and also on their oilseed trade update, speaking to the issue that we've really had a soy meal market, export market that's been on fire this past calendar year compared to the soybeans. And so soy meal to me, because of that and because of the question mark about Argentina coming back, since they're one of the largest exporters, if not the largest exporter of meal in the world in certain years, it really is important to watch the meal, I think, more than the bean oil until we find out more about our fuel policy. But I'll take what I can get out of Malaysia, and I'll take what I can get out of India. Also out of India this week, we have started to hear a little bit more about their weather pattern being pretty negative when it comes to wheat production potential. So that's something else to be watching, is that we're now at a 10-year low, and we've stayed at a 10-year low on those world wheat stocks to use ratios. That in and of itself should be a reason why funds should want to cover shorts if that dollar goes down and that Chinese currency goes up. So to your point about the bean oil, I'd like to see the wheat and the corn come in and support the beans and the bean complex as a whole. Then I feel like it's got more upside.
We are having a conversation today with Mike Zuzolo from Global Commodity Analytics. Mike, let's turn our attention to South America now. And I'm hearing more chatter about some weather concerns for safrinha corn, for instance, a little bit of heat and dryness in parts of Brazil here this week. So what's the latest you're kind of hearing in terms of what this South American crop is looking like right now? Is there something here for the bulls to maybe latch onto, Mike?
I really think there is, Jesse. I think the models, for the most part, are starting to dry out and heat up over the next 10 days. And with about 60% of the Brazilian soybeans harvested and 100% roughly of the safrinha corn crop planted in those three major center west Brazil areas of Mato Grosso do Sul, that's MGDS on that map, and then Goiás. These are the major areas, and Paraná's got some pretty strong second crop corn planting numbers in it as well. But you can see what I did here was the green shading is the crop overlay. That's where the major crops are for Brazil and Argentina. And then I overlaid that with a soil moisture anomaly. And this anomaly shows how very dry we are in the large portions of those same provinces. And so I sit here and I see the beans rally without the help of the corn or without the help of the wheat. And I think to myself, between what CONAB did yesterday, what USDA did last Friday, and this map right here being the heart and soul of the Brazilian corn crop, because we have to realize 75–80% of the second crop corn is the total production for the whole country. And these three provinces are about 80% of the second crop corn production. So, I mean, this is the heart of this would be like Iowa, Illinois, Nebraska, and Minnesota, all burning up right now. And I think that's what the picture I'm trying to present here is. This is a critical feature to this market. And if the corn doesn't rally here, I'm not sure what will allow it to rally, especially given CONAB's numbers yesterday. I just have to say very bluntly, Jesse, it's kind of like the wheat. We've been talking about the wheat stocks being so low globally. Well, we've got a corn stocks to use ratio here globally that's been hanging around 26% for the last 4 or 5 years. If we took those 11 million tons that CONAB is light on compared to USDA for Brazil's corn production, we pushed that into ending stocks, didn't change anything else in the balance sheets, we'd go from the highest stocks to use ratios in corn in the world since 2019, which we're at right now, to the lowest in 5 years, or lowest in since 2017, 2018. So we're talking about a big shift potentially in the world stocks, and we need to be watching this real closely.
I would agree with you, Mike. And I've heard some chatter from South American sources, and maybe you've heard the same, that some of what we've already grown down there with soybeans and first crop corn, there were some disappointing yields as well. And with that too, you know, all the different estimates, the CONAB numbers, USDA, it feels to me like that eventual final number is probably going to be somewhere between all these private estimates and the USDA number at this point. Would you agree with that?
Yeah, and I think it's still moving, and I think this is where the small crop gets smaller. And I think even to your point about what you've been hearing, I think you're exactly spot on, because we've got a situation now with the harvesting so ramped up in Brazil at this point, we should know relatively quickly, like right now, and we've talked about this before, whether the farmers in Brazil will sell at these disappointing, depreciating prices, or will they wait and hold off and let the prices rally? And we've seen in both Argentina and Brazil about a $25 to $30 a ton increase in prices at the upriver in Argentina and in Paranagua in Brazil. And I think that could go higher depending on what these maps show us. And I think the farmer selling, the export price, to me, those are extremely valuable tools now to give me an idea of whether I want to sell or not sell. And I did pull the first trigger on my first 15% for clients on 24 beans this week when we hit that resistance level yesterday.
Yeah, and that was something I was going to ask too, just general risk management thoughts. I know a lot of producers are going to get very busy here with plantings, but can't get complacent with your marketing, especially as we're kind of hitting some of these resistance levels right now, even if there's some bullishness in this market. And I'm not trying to wind up the bull here, so to speak, Mike, but I think it just all echoes back to being a smart marketer and not getting complacent in this window, right?
I couldn't agree more, Jesse, because what we're going to do in 24, we're either going to add to a normal supply or a tight supply, or we're going to take the supplies down in the northern hemisphere. And that's going to make or break us for 2025. So my take is, look, let's sell for profit in 2024. I have no problem reowning into July and August in a known cost fashion, starting with corn. But I really don't want to screw up a good profit at this point. And I think at 1180 November beans, 1180, 1185, where we were yesterday, I thought to myself, if that's the worst selling price that I start out with this year, and we've got 112 million metric tons extra, and even with CONAB's number, we're still above 100 million metric tons. Well, that's not a bad number to start selling at, especially given last year at this time we were at about $15, and we had a lot tighter supply-demand situation going on and a real big drought in Brazil.
Good thoughts. Let's talk livestock here a little bit, Mike. And I'll pull up a cattle hog correlation chart on our video feed. Cattle had a pretty solid day Wednesday. Hogs felt like some spread unwinding maybe in the futures there. I feel like same with grains. Cattle and hogs have maybe gone a little sideways here lately. So talk to me about that and what you're seeing on this chart between cattle and hogs right now, Mike.
I got a little wonky on this week's update for the livestock when we look at these correlation charts, Jesse, but it's for a reason. We've got a cash cattle trade that's very strong. We've got box beef prices that are coming in very nicely. The retail activity index was up 15% on USDA's report last Friday. So the fat cattle are running pretty much on all eights right now. Having said that, they've come to a standstill after going back up above the September of last year's high, and they're above that on a closing basis as of Wednesday's close. Why aren't they shooting up even higher? And I think it really goes back to the hogs, and it goes back to the feeder cattle. I think at these price levels, with more uncertain consumption this summer, especially given gasoline prices starting to climb, I think the cattle market really needs the equity markets, the hogs, and the feeders. And this is a correlation chart on an 18-week basis between the lead month cattle and the lead month hogs, and you see how they're running almost a plus 90% when it comes to their price action. So this supports the idea that the cattle need the hogs. And the hogs, obviously, as I talked about before, hogs, copper, wheat, those are the ground zero for China and the deflationary pressures, and whether we're going to shake that free and go into inflationary mindset, or whether we're going to get hamstrung by the China deflation again. And that goes back to your point just a minute ago.
Well, another chart here as well, S&P 500, to your point about stocks, correlation with cattle here, I think this kind of speaks to the same things you're talking about here. Just looking at this overall picture right now, Mike.
Yeah, I don't have a stockbroker's license, but I sure watch the S&P 500 because of the relationship of the consumer and his 401ks and the credit card debt that we have right now. And so if we start losing the 401k, I think we can almost guarantee ourselves the idea that the consumer is going to pull on his horns on his consumption and eating out and really start to tie down his food budget. And this shows the plus 90, almost 90% positive price action on the exact same 18-week correlation between the S&P 500 and the live cattle. We're making new record highs in the S&P 500 with the Bitcoin, with the gold. I just am sitting here thinking to myself, how many more months can we continue this type of pattern? And it's really starting to make me nervous. So if that equity markets gives way, and I'm starting to talk about that with clients based upon some of the economic data, I think, Jesse, you really got to factor that into your cattle hedging program and also what type of consumption we could have this summer.
Well, thinking about that, I'll steal a term you've used with me before, that BLT seasonal. Do you think that we're getting to that time, Mike, where that could maybe save us a little bit from any negativity here in the livestock trade, Mike?
I do think that. I think that goes right back to the hogs being so important. And I saw my first, I think, Arby's ad where they're doing a Hawaiian bun coating on bacon. And I said, oh, yeah, here we go. The BLT season will bring on the tomatoes. But yeah, that works in conjunction with the idea of rising tide lifts all boats. And I think that's where the dollar still is such a pronounced key, that if it goes down, then we don't have to worry about as many imports, and we can push out the exports more and make that domestic market fight for that business, for that supply.
All right, Mike. Final thoughts from you. Anything else you want to share or reiterate to folks who are listening in here today?
Well, I've had a really strong presence of new trials coming online this month, Jesse, and I think it's this funds versus fundamentals. And if you've been sitting on the sidelines, please consider a free trial, because I think it's a really great time to start looking at this and getting this understood so that you can use it in your marketing plan. So go to globalcomresearch.com and take a look at our free trial.
Globalcom with 2M's research.com is where you could find all the information for Mike Zuzolo with Global Commodity Analytics. Mike, always great to chat with you, sir. Thanks for joining us. We'll talk to you next week.
Thank you, Jesse. Have a great week, buddy.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.